All right, good afternoon, everybody. Oh, Josh has jokes. Josh bringing the jokes. We'll get you a stand-up spot, Josh. We can do it at the office. Invite all the traders. I am an associated member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. The position disclosure here should be unchanged. I got back into Beyond Meat during the day. I'm keeping a little bit overnight, even though it closed terribly. I'm still up pretty good money in it. A lot going on here after hours. I hate when I miss trading opportunities, but it happens. CRM at that 180, selling off on earnings, I thought was a buying opportunity down there, and it just too many things I was juggling, didn't do anything. The big thing about the Salesforce report, I think, is that buyback that should pad down anything that you don't like about the report. Let me scroll up and find it. So Salesforce sees 2025 revenue a little bit below estimates. So market's not going to love that. They see Q1 adjusted EPS solidly above estimates, $2.37 to $2.39 versus estimates of $2.19. So I think that it's primarily that, first of all, Salesforce has had a huge move, but also the miss on that revenue guidance for 2025, not great. But then they announced a $10 billion buyback increase. So, boom. That's going to really pad the downside a little bit. So, CRM here moving after hours. 280 is a big level on the daily chart. Got down there, more or less held it. The after hours low is 278.61. But I missed it the first time, so I probably would not take it on a second time if it got down there. We've Okta out, crushing life, this stock. Big breakout here on the daily right now, taking place after hours on its report. 2025 revenue guidance is a beat. Q1 adjusted EPS expectations is a very big beat. 54 cents to 55 cents versus estimates of 42 cents. So that's solid. We have Paramount out here after hours. Doesn't seem to be doing too much. Trading right around where it closed. And then the big one on the downside here is Snowflake getting massacred. Into the 200-day here might be worth a potential stab. Be careful, obviously, after hours trading, super volatile, yada yada. What's the true after hours low? Can't even see it on my charts. Was it like 173-ish? 172.68. 200 days, 175.72. Not a great report. So let's see here. Q4 product revenue beat by a bit. Q4 adjusted diluted EPS is a solid beat. Q4 revenue is a beat. Guidance though. Rev guidance for Q1's a miss. 745 to 750 million versus estimates of 769.5 million. So that's a solid miss on the product revenue guidance. 2025 product revenue guidance is a miss. I don't know what these margin numbers mean without seeing expectations. But the CEO is leaving. And apparently the CEO is a big deal. So I guess it was unexpected. They didn't know. He announced his retirement. So I don't know enough about the CEO to know, is he an older gentleman and it's time for him to retire and he's ready to do that, or what the deal is with that. But it seems like the market wasn't expecting it and they're hitting this thing down pretty hard. It's also another name that's had a big run into its report. But I do think into this 200-day area here, it's worth looking at. But we'll see. We have AI that's out now. Ooh, AI. Pretty big short float on that one. Squeezing up. This thing has had big resistance in this low 30 area. So let's see if this report can change that. C3.ai, third quarter revenue is a beat. Third quarter adjusted loss per share, 13 cents versus estimated loss per share of 28 cents. It's a solid beat. Not seeing any guidance for the moment. But yeah, this AI trading well, so we have another potential squeeze name. I feel like I'm late on this one to even look at it. Might be worth looking at this thing into a dip, though. Retested this like 32 area that it's breaking out from if it's able to hold. But we'll see. We'll see. Just give me 1 second. Okay. Yeah, take your billion and enjoy. It's no CEO 65. Good for him. Ion Q is out now. Here's another one that I think has some squeeze potential. Initial move is higher. This was a large short fill also, right? Q1 Rev guide. I like that beat. I mean, it's within the range, but upper end. Tempted to nibble on this thing. Here I go again. Just give me a minute. I gotta stop doing this in afternoon meetings, don't I? All right, just give me one quick minute here. There we go. Nice pop. Yeah, I really probably should stop trading like this aggressively in afternoon meetings, but it's so hard when they just want to give me this money to make. I'm sorry. I just like the money too much. Come on, let's rip this thing through this 13. I did dump some into it. Like it if you would break 13 for me. Sorry, I just got to get a few more offers out and then I should be good to talk about the market today. I got so many partial fills today. It must have been like a record. Just got another partial here after hours. Setting partial fill records. Alright, one more offer. Okay, now I'll just keep an eye on this thing. my microphone is not even close to my keyboard. I just the one cool thing that we don't have at the office anymore would be, I don't know, Pat knows. If you've ever seen how fast I actually trade, I just put out 40 orders or something like that in Ion Q in that period of time that I was chatting with you guys and getting executed on each side. So you know, how fast did I do that in? When I did my first execution in this thing, 19 minutes and 6 seconds in. Yeah, so it's been under 3 minutes, I got 40 something orders out in the market for this thing, and traded it at the same time. But yeah, sorry about that with this loud keyboard. I like this keyboard though. This keyboard is fast, and that's cool. That I'm at the office in Manhattan. I have the worst technology. You would think that at the office you'd have the best technology. I have the worst possible technology there out of anywhere that I trade from, including the keyboard. It's like crappy. Yes, I agree with you, but I think that this keyboard, because it's like super springy, helps me actually get orders out even faster than I can on like not that I know anything about keyboards, but that other one that I think I have at the office is like flat with those smaller buttons, and I just hate it. When they came out with high-speed algos, I took it as a challenge. Yeah, that's right. That's right. All right, we couldn't break that 13 for me, but I'll keep an eye on this. Large short flow, right? I'm pretty sure someone told me that in the meeting. I was, or prior to the market closing. That's part of the reason why I bought this. I haven't broken a keyboard at the office in years, for the record, Josh. Years. Yeah, definitely not since pre-COVID. 27% short on this Ion Q. We'll see. I might have to hit out here soon, actually. I don't really want to give this thing any real room. Okay. If I had a silent but springy keyboard, it would not slow me down, Rich. So, I guess I could make that investment at a certain point. Actually, I want to see these numbers again for this Ion Q, and then I'll jump into the meeting. Let me scroll up here. You see bookings of 70-90 million, Q1 revenue 6.5. Wow, those numbers are so small. It's a beat, but their numbers are so small. They named Dell Technologies Bill Scannell to the board. That's interesting. Loss attributed to holders 20 cents versus estimate of 19 cents. All right, they're hitting this thing back down now. Was able to sell more than enough on the way up, though. Jeez, you hear that? That was the ice falling off the roof. Yeah, Qs are trading a little lower after hours. Thank you for letting me know that, actually. I knew that. But I gotta get some orders out in that, too. All right. All right, one more. Okay, so the SPYs here, including some after-hours selling, probably resulting from snow and Salesforce, are down 0.4%. Qs are down 0.8%, and the IWM is down 0.9%. So yeah, very boring trading session from an index perspective again. You know, the fourth day in a row where the indices here, these SPYs and the Qs are just very boring. The range that the SPYs traded in was... Is it an inside day today? Wow, I didn't even realize it was an inside day. So SPYs are an inside day within the confines of yesterday being a super tight day also from a range perspective. So we have an inside day. We're still sitting on this 80 EMA on the daily. We have not broken down. We have not broken down through the key level that we've been paying attention to, which is Thursday's low, 503. But we have not been able to really break up and continue the trend off this 80 EMA on the daily chart as it's caught up either. Let's see if PCE tomorrow changes that. There's really nothing to talk about here with this market from an index perspective. There's no updates. We're in a bullish consolidation. We're above all key levels, but we have not given any real upside continuation yet. Not yet, at least. So we'll see if PCE can act as the catalyst for us to break up and give continuation off this pattern, or if PCE can act as the catalyst that actually gets us below 503, which would begin to change the market here a little bit. Popping over the Qs. What do we have from the Qs? Qs are not an inside day, it seems. Just eyeballing it. No, they're not. But also rather boring range-bound trading session here with nothing really to talk about into this equilibrium zone, but still above the 433.71 key level from Thursday's low, though barely, to be honest. The market should really be able to go here technically. Technically, it probably should have went today. Yesterday, we had that little doji into the 80 MA on the SPYs and the Qs. Technically, we should have been able to get continuation today, but we didn't. It just turned into a super boring trading session. So I don't want to read too much into that, to be honest. Just know your key levels, and we'll see where the market ends up after the PCE tomorrow. IWM giving back a little more, moving into this gap, but it was the most extended into the day. Whereas the SPYs and the Qs have been very boring this entire week. The IWM has been a little bit more exciting, giving some good upside moves, coming into some rough resistance in this 204 range. But we looked at the good point there, Bill. I meant to actually bring that up. We looked at the IWM weekly chart and daily chart yesterday and noted just how much more bullish that weekly chart's beginning to look in this thing as it holds above 200. And then Bill reminded me out of the corner of my eye something that I did want to mention that I thought might actually also be having an effect on the heaviness of today's trading, which is just there's pension rebalance selling, which I think we saw from one of the notes that should be like $15 billion. I feel like I find whenever there's larger pension selling or buying, not that this number is particularly huge, but I always feel like it affects the market, not just the last day, but like the last 2 to 3 days. So maybe a little bit of front running on that. Pension rebalance selling is weighing on the market here a little bit over the course of the last day or two as well. And then tomorrow, we potentially have some further end of the month flows. So yeah, February went fast, right? We're already wrapping up this month. So that's the market. Again, really nothing to talk about from an index perspective, but even though the indices have been very boring, there have been plenty of excitement out there. Obviously, we had a lot of excitement for a while with these semiconductors. They were a little bit boring today, though, for once. AMAT was in the news with some negative China news that was negatively impacting NVIDIA a little bit as well. But like I said in the morning meeting, NVIDIA is not even down to the daily chart. But it's been about these growth stocks, right? The excitement in these growth names. This Bitcoin today, great call out from Dimitri and Pat and a few of the traders on the Bitcoin short today. Just seeing this upside capitulation kind of come in with the maximizing volume here. Initially on that upside, this big green bar at highs, followed by this like push through failure here, back down through $30 for this BITO. It's a great call out on that short here from the team, and that was a great trade, and that was pretty much the top of all these crypto names. I should have known. I have a buddy who I think has called every top in crypto that has ever had because he just my phone starts blowing up, and it's like a group text with a couple of friends, and the text started coming in about Bitcoin today, and I just responded. I was like, dude, you realize you call every single top? And I was like, he was getting excited, but he wasn't buying yet. I was like, just let me know when you start buying, because that's always the real signal. But I should have known him just texting me was enough. Him starting to get super excited. Oh, do you see this Dogecoin? That was literally a text message I got. So, no, I don't see Dogecoin. I don't look at Dogecoin. I never will look at Dogecoin. So, and that those texts were within 10 minutes of the top of Bitcoin. But regardless of that additional signal to come in short, great call from Dimitri and the team and everybody that was involved in that on the short side there after that upside capitulation came in for this thing. So yeah, that was a good trade. I spread myself a little bit too thin, I think, this morning with really aggressive game plans for a few of the names that I'm in. and taking on this extra beyond and trying to be in a feeler in this lemonade for momentum, and then I just wasn't able to manage it right, and then I got really annoyed at myself. Didn't stop myself out of this thing where I should have. I didn't manage it well enough that the loss I have on this is very small, which is great, but regardless of that, I just get frustrated sometimes when I don't trade things right. I was just spread too thin, juggling too many stocks, too many aggressive game plans, too much trading execution, despite how fast I can be on the keyboard. And I wanted to be involved in this for momentum through 1750 on the upside if it could break. That was really the level that we discussed in the morning meeting. $18 on the daily chart, but 1750 based on the small time frame. And I was trying to get ahead of that with, an initial smaller feeler, and I was trading around that position a little bit, and then at one point I was probably a bit too heavy than I needed to be, and then I didn't stop myself out on this break of lows like I needed to, and I wasn't watching it. Just had something else on my plate. I think the beyond, which was moving, insanely fast at the same time, and I was trying to juggle that position. I mean, you could just see here on my execution just how aggressively I'm trading some of these things. There's a million dots on this, so those are all obviously trading executions, and I'm doing and focused on that. Also with aggressive, at the same time as I'm doing that, I'm trading TQQQ, also insanely aggressively, and the lemonade just got away from me, and I just get very, very frustrated with myself when I make those types of mistakes, because I've been doing this too long. I've been trading way too long to be making those types of mistakes with my trading, yet that's what I managed to do. So that was a big focus for me, and I think it like took away my focus from the indices a little bit and some of the other things I was looking at, which isn't necessarily the end of the world because the indices were very boring. But I really don't have a lot to talk about with this meeting, to be honest. Follow your game plan. Stay within your trading capacity as far as how many names you're able to watch at a certain point, and trying to semi-aggressively trade two earnings names at the same time in conjunction with everything else just proved to be a little bit too much for me today. So that's all I got. If anybody has any questions, of course, I'm happy to answer all the questions that you have. So I don't have much for the meeting, but we'll see what you guys can make of it. Seeing from Carol here in the VTF, what are your rules for the momentum trade when price breaks through an important level? So when you say that, when it breaks through a level, it sounds to me like you're asking specifically about like breakout momentum trades. So I'm not sure if I have a good example of a breakout today, though that's definitely not the only momentum trade. So I guess I would start by answering your question by just kind of clarifying a little bit. I think the term momentum trade that you're using encompasses many different types of trades. It's like what's the term I'm looking for? It's like a title of a group of potential trades that encompass this term momentum, right? Momentum trades. So an example of a breakout trade is an example of a momentum trade is a breakout. When you have a daily chart resistance level and the stock breaks through that. But another example of a momentum trade could be an earning stock that's gapping up really big and gives an inside 5 and up. And you're just buying that for pure momentum on the upside. So what my rules are depends on, honestly, what type of trade it actually is that I'm taking. I'm going to be trading a breakout a little bit differently than I'm going to be trading an inside 5 and up after an earnings gap up. So if I'm buying a breakout, and then you buy versus the low of the ignition bar, I try to get my risk covered as fast as I can, and then once I get the risk covered, then I'll have some sort of game plan for reward maximization and specifically how I want to trade it. So it's probably not as detailed of an answer as you're looking for, but the question I think is very broad. Um, but the rules will encompass rules for risk management if the trade is wrong, where the stop loss is supposed to be, getting the stop loss out, rules for how I'm going to actually execute the entry, whether it's buying through the breakout with a buy stop or buying through the inside five with a buy stop, and then rules on how I want to book profit, which first includes how I want to mitigate risk by selling some to cover risk. It's really more risk management than it is profit. And then finally is rules for reward maximization on continuation, which is really how I want to game plan this thing based on the daily chart, based on how I liked the earnings report, based on how extended the thing is, things like that. So I guess every trade that you're going to get involved in will have rules for all of these different components: rules for risk, rules for entry, rules for covering risk, and rules for reward maximization. And that includes all the various types of momentum trades. So I hope that helps. From Raj. Um, no question for today, but just a question for the room. Does anyone trade small caps? Do you consider this Ion Q to be a small cap that I'm in right now? I don't know. It's a $13 stock. Trade a lot of Beyond Meat. I'm in this FSR, which is less than $1. So yeah, I think I can answer the question for the room a little bit, and the answer is yes. We probably trade a bit of everything, though what you probably see the most of is the bigger cap stocks. But if there's trading opportunity, we're not afraid to be involved in it. I don't love stocks, and I very rarely get into stocks, even though I'm in one right now, that are under $1, and honestly pretty rarely under $5, and they just tend to not move well enough on an intraday basis to pay me. So that's the biggest reason why I don't like them. You know, like the only way that I would ever get into a stock that's under $1, like I am with this FSR, is because I think I can make over 100% in it if it actually moves correctly. Otherwise, it's not worth it for me to be in that. And capturing 100% moves in the stock market is not easy, even in individual stocks. But this FSR, I loved the communication, the VTF yesterday that was coming from Jim and a few people in there about the very high short float. We know that the stock is super beaten up. There's anecdotal evidence in there about how you guys are like seeing more of their products or whatever it is that they do. I love that type of anecdotal evidence, and yeah, so that type of name plus the short squeeze potential into an earnings report. I'm like, you know what? Let me take some here, and maybe we get 100% move out of this thing. It is possible. From Roble on CPNG. Yeah, this was one of the ones on the radar from the morning meeting today. Would a long on the third 5-minute candle be viable? Oh yeah. If the risk is doable versus this low for you, it looks like it's a lot of risk. It's a big tail. You know, you might be taking 40 cents worth of risk on that. So you need to assess for yourself if 40 cents worth of risk in this name is going to be worth it from a risk reward perspective. It's a lot, but from just a pure charting perspective, yeah, I think we talked about this yesterday. I'm a big fan of earnings names that price correct into the ADMA on the 5-minute, and on their first test give you some sort of doji off of it that you can potentially trade. And that's what this thing did. Doji down into the ADMA on the 5, hammer doji here for continuation, and then, you know, was able to grind up for the rest of the day. So definitely. It doesn't have to coincide with the daily level. If you had a daily level at, I don't know, $17.40 in conjunction with the small time frame setup, that would be great. But I think that what you need to know for this is you don't necessarily need the daily level. You need to know that it's an earnings report, that stock is gapping up really big, that the name has the capacity to run, which we talked about in the morning meeting, we've seen in the past, and that you can take the small time frame execution for the trade. Yeah, SoFi is another one. Yeah, Sammy maybe trades those cheap names a little bit more than I do. From Tate, what do you need to see from the market for you to close your TQQ position? That's a really good question. So, I'm not nearly as bearish as I was on the market. Like, not that I was bearish. I described myself as becoming significantly less bullish at a certain point here in February as we were coming into OPEX, coming into a seasonably weak period of time for the market and getting a lower high here for the Qs in conjunction with all the positioning and flow data that we've been looking at, just had me significantly less bullish to the point where I wanted to have a more aggressive game plan for the short on the Qs that I have on. And I've been following that. And it started, maybe even started back at the end of January. I really don't remember when I first got into this, but it started as an extension trade that that once again paid me pretty well. I still have a 100% success rate on those $10 extension trades in the SPYs and the Qs going back a couple years now. But this time I was like, given all the data on here and given that I still have all these long positions, I think that I'm actually going to be more aggressive with this QQQ position. Instead of getting all out of it, I'm just going to continue to kind of work it on the short side so that I have this short on the book in case the market actually has a deeper breakdown or a deeper pullback. And if the market goes up, well, then I've worked it well enough, I've made enough money in it that I'm willing to give back everything that I've made. And I gave back a lot of money in this thing on the 22nd, obviously. Had gotten almost all out of the position at lows here on the 21st, but I started reshorting way too early after NVIDIA reported after hours on that day. And I gave back, not all, but I gave back like a boatload of the profit that I was up in the TQQ short on that day. But since then, honestly, these ranges are great for me. I make a lot of money in these kind of sideways ranges. I'm not getting pushed out to the upside, and I still am able to have my stock. I did force myself to size down a little bit, I think on the 23rd, just because everything was so strong. But even with doing that, I'm still willing to give back everything that I've made. So to directly answer your question, I don't really know, and that's probably a bad answer because any trade that you're in should have like a full game plan. But I'm not, as we've discussed, trading this with a stop loss because I'm kind of trading my P&L, which is something I also generally preach not to do. But I'm kind of trading my P&L on it, and I'm also kind of trading it, keeping it in mind that it is still acting as a hedge for the market. And if we were to lose last Thursday's low, which the Qs are testing right now, then I'll be very glad that I had this, and it'll become probably very profitable again. So I'll either run out of stock eventually on the downside, but then I'll be asking myself how aggressive I want to be on reloading as I lighten up on the downside. So I don't really see myself getting out of the downside in this in any near term. I actually think, based on what my game plan is, that if this thing goes down a lot, at a certain point I'll actually begin to chase price lower on my short in the Qs, which will, at a certain point on the way down, will get me heavier again. Like I'll be lightening up on the way down here initially, but then potentially at a certain point getting heavier again on the way down, per my game plan on that side. So no real game plan to liquidate my Q short for the moment on the way down. If the market declines 10%, I'll probably get out of it. I'm just throwing that out there. On the upside is probably where I'd be more likely to, at a certain point, see that I've given back everything that I've made on that short, and then size down much more significantly further, or at a certain point potentially liquidate the position and reassess. But I don't have a specific game plan for at what point or price or what I need to see in order to get out of that. It's a little bit more based on P&L, and I like the idea of having that short on. I love the idea that I have this TQQ short on right now with all my longs while it's in the money, which is just great. And again, the thing is that, like, as this thing moves sideways here, I'm just kind of banking more and more and more and more money. Like, again, I just threw out my executions earlier just to show you like how busy I kind of was, and maybe I'm making an excuse, but why I made the mistake that I made in Lemonade. But this is all cash flow for me, and I'm doing this every day in this thing. So I'm just kind of making more and more money from a cash flow perspective as this thing is moving sideways here, which if anything enables me to hold it against me moving higher. If the Qs were to break higher, if the Qs go to, I don't know, I don't know at what price based on my game plan I'd give back everything. 444 maybe right now. But every day that goes by that I'm able to trade this thing the way that I just showed you actually brings my break-even price even higher on this and lets me hold that even longer. So I don't have a direct answer for you. And also being honest as I always try to be about what I preach is the right thing to do with trading versus what I actually do in certain scenarios. I would preach to people, don't trade your P&L. Well, here I am. I'm trading my P&L in the position. But I've also kind of explained the rationale behind why I'm doing that. So I appreciate the question, Tate. It's a great question, and I hope that helps with the answer. Cool. So it looks like I got through things there in the VTF. Jim, shoot me an email and I'll see what I can arrange. See what I can do for you. Popping over to the YouTube. First from Robert. What was today's morning thought process with the gap down open after yesterday's strong close? Didn't you expect buyers will step up from the daily ADMA for the SPYs and Qs and hold the market to the close? Yeah, so I did. My base case assumption this morning when I was doing the morning meeting as we were gapping down was that it was a gap down that you should look to buy. Especially if we are still above yesterday's lows for the SPYs and the Qs, you could look to be long versus those lows. And that gap downs in strong markets when there's no extension are traditionally something that you want to buy, and probability-wise, you'll get paid in the long run. I thought that the second highest probability situation was that we could get another tight day, though, with the market just waiting for the PCE, and that ends up being what happened. And if anyone asked me, no one did, I would have said that the lowest probability situation this morning is that the market breaks down. So, yeah, my morning thought process, what you're describing there was right on point. I was looking for this market to be able to rally off the gap fill today. We didn't. It turned into kind of another boring, sloppy trading session that SPYs, like I just showed, were super, super tight. And then, I don't know, we closed very whatever here for it. So, appreciate the question, Robert. From Turbine, if you say the word digestion enough, you begin to believe. How about monster selling? I'm not really sure what the question means. I haven't seen any signs of monster selling as you're describing it in this market anywhere, except for Snow After Hours. Some of these earnings names. Is there the potential that this consolidation in the daily chart of the market breaks down and leads to heavier selling? Absolutely. The data, the spots that we're really looking at are like that 4,900 area to the downside. I think if you lose 4,900 area in the SPX, that you trigger a price point that could become a waterfall of selling in the market. But while we're holding above that, this market's very insulated from down moves. So I'm not sure I fully understand the question or comment, but I still appreciate you asking it. From Gabriel, what do you look for in those earnings trades? High short float, absolutely. High short float is something I'm really paying attention to right now with some of the squeezes that we've seen recently. Massive 10% plus moves. Yeah, maybe. I actually don't like when stocks move too big on their earnings reports. Because then I feel like I'm chasing price a bit. But if I'm chasing price a bit in this environment and it's got a high short float, I'm willing to do that to some degree. From Robert, can you also talk a bit about tomorrow's PCE numbers, what your expectation is, And why do you think that the PCE data starts all of a sudden to matter so much for the market? Sure. So that type of research I usually do the morning of would be the first thing that I would tell you. So I have no idea what the expectations are right now for the actual PCE number. I definitely read it somewhere, maybe in Pat's note this morning, but honestly, it was like the number went in one ear and out the other, and that will be something that I really just look at going into the number tomorrow. I mean, I think it's relatively straightforward. We saw what happened on a hot CPI and PPI, even though the market really impressively managed to get bought back up each time. You just wonder how many times the market's able to do that before it kind of caves underneath its own weight of higher interest rates and higher inflation numbers and data actually coming in, which of course is a big concern for the market. It's been miraculous how well this market is overlooked at recently. So, PCE comes in hot, we're probably going down. PCE comes in light, we're probably going up. PCE comes in line. I really don't know, but I would assume the direction of the trend is what stays. Why did the PCE start to matter all of a sudden? It's funny, I talk about this every once in a while, and you've probably heard me talk about it in the past. It's interesting to me how over the course of my trading career, just certain numbers and certain things just come into favor and out of favor or become more or less important over time. I don't think I ever paid attention to the PCE ever until the last year plus, and I don't think that I don't remember it ever moving the market until the last year plus. But inflation wasn't a problem until the last couple of years here. So it became important because Jerome Powell at one point said the PCE is our preferred measure of inflation. That's literally what they said. We care more about the PCE than the CPI. The CPI still moves the market more than the PCE does, even with him saying that. But him saying that was enough to make the PCE a significantly more important number. So, Gabriel saying, I know that you're an Apple lover, but I like Apple. I'm an iPhone user, but I'm not like an all-in Apple guy. I've never owned a Mac. I'm a Windows guy. I don't see myself ever owning one. But I definitely respect the company. I respect their business. I respect the CEO. I respect their cash flow, and I definitely respect their buyback. Let me read the rest of your question. But if the PCE triggers the market to the downside, do you think that Apple through 180 is a good short? Yeah, I've been talking about that Apple 180 as a short for a while. I thought it was notable that Apple was very relatively weak today. After this strong move, it gave back almost everything on its AI announcement thing that it did. So I thought that was interesting to see how weak Apple was today. I felt that if Apple tested 180 again yesterday, that it was going to break it and it was going to lose it, and that it could be a good short. It got saved by the news. I still think that shorting Apple is always a very difficult thing, but if you get the market beginning to break down, if we lose that initial support level on the SPYs and Qs that I keep talking about, and PCE comes in hot and the market's trading down, and Apple's losing 180, yeah, I do think that's a good short. And if anything, the bounce back yesterday makes it an even better short. What I've been saying is I think that if Apple really substantially loses 180, that a legitimate target on the downside is the upper 160s. So I do think that has the potential to be a good short. Just keep in mind, like we said in yesterday's afternoon meeting, somebody even did the math for me a little bit. What did we say? On average, they buy 150,000 shares back a day, and it's just an insane number. Dimitri giving me a joke here. Breaking. Apple canceled plans to make a car after realizing it would require Windows. Cool. So thanks for the question, Gabriel. And finally from Joy in the VTF. What is your view on healthcare provider CI? I don't trade these names. Cigna. Is that who I have as my health insurance? I can't remember. No, I had them last year. Now I have somebody different. I have no idea what caused this breakdown today, if this was just technical or what exactly was going on. I really don't follow these names as well as I should, and I don't have a strong opinion for you on it. The stock has been super strong. It's probably due for a correction. It corrected down to the 21 EMA on the daily. There's not really an increase in volume on that into that move. So I think that dips are viable in this thing, but I would look for a signal to come in and buy that dip, and we don't have that yet. So appreciate the question. Wish I had more for you on it. Whew. All right, I'm gonna wrap it up. I'm gonna wrap it up. So thank you everyone for tuning in to today's afternoon meeting. I hope everybody had a great day, and I'll see everyone tomorrow morning. Adios. If you're on YouTube, you don't